Why is Bitcoin dropping like crazy? Bitcoin is dropping, but why? According to CNBC, the selling observed in higher risk assets such as technology companies has been tied to the selling witnessed in cryptocurrency markets as investors brace for tighter monetary policy from the United States Federal Reserve and higher internet rates. In the words of Jessica Chu, head of OTC options trading at Kraken, it's plausible that macroeconomic worries, such as the Federal Reserve's reaction to inflation rates, have encouraged greater de-risking activities in general. The recent price decline, along with excessive volatility, might lead to more selling as players seek to limit their exposure to risk. Hello everyone and welcome to another video on our channel. In today's video, we'll be talking about why is Bitcoin dropping like crazy. Yeah, you heard it right. So let's get started with our video. The crypto roller coaster is once again in full swing. After plunging as much as 15% on Sunday, Bitcoin has regained some of its losses so far this week. Rival cryptocurrencies like Ether and XRP were also hit hard after reaching a record high of more than $64,000. Less than a week ago, Bitcoin continued to rise, reaching a high of more than $56,000 on Monday afternoon in New York. The highs coincided with the stock market debut of Coinbase Global Inc., the biggest cryptocurrency exchange in the United States, which fueled interest in all things cryptocurrency. While some investors believe the currency is expensive, others believe the current slump is a time to strengthen their resolve and purchase the coin. Even Dogecoin, which started as a joke, had a 20% increase in value. So what's happened and what's the cause of the decline? No one response applies in all situations, particularly when dealing with assets that are opaque, such as cryptocurrencies, where it's sometimes unclear who's selling or purchasing. Analysts cite a diverse range of grounds for their conclusions. Regulation fears. More and more governments are taking notice as digital assets gain traction with both retail and institutional investors. From April 30th onwards, Turkish banks will no longer accept payments made using digital currencies like Bitcoin or Litecoin, according to the central bank's announcement on Friday. Online rumor has it that the U.S. Treasury is getting ready to clamp down on digital assets used for money laundering. The Treasury Department was unavailable for comment. Another source of regulatory stress is China's yuan creation ambitions by its central bank and the restrictions on cryptocurrency mining in Inner Mongolia, a hotbed of the sector due to its low-cost electricity. In an interview with Bloomberg TV, ErShares chief investment strategist Eva Ados warned investors to be on the lookout for greater regulations. They expect significantly greater volatility in the future. Overexcitement. Any significant rise has the potential to cause the market to become overconfident. As Galaxy Digital creator and longtime crypto bull Michael Novogratz remarked on Twitter, he believes the market's current drop is a healthy correction. Idiosyncratic factors. There are a number of other factors that might be at play. The total processing power of the Bitcoin network was diminished as a result of power disruptions in areas of China, according to industry news site CoinDesk on Saturday. Then there's the matter of when. A Melbourne-based market analyst at IG, Kyle Rhoda, remarked that Bitcoin gets wild on weekends since it's one of the few markets accessible in trade-in, and some of the purchasing support has waned. How significant are the drops? Cryptocurrency's recent volatility has brought back memories from the 2017 crisis, which has been repeatedly warned of by conventional financial leaders. From a high of $19,000 to a little under $4,000 at the end of 2018, Bitcoin's value dropped. The present pullback is significant, but it's nothing near as significant as that. Bitcoin's value has risen by 93% since January. The asset class is known for its volatility. Sunday's decline of 15% was just the second largest intraday decrease since February. Ether's been up more than 200% so far this year, despite a drop of 18% on Saturday and a drop of 9.4% on Sunday. It's difficult to estimate the price of cryptocurrencies since there aren't many basic criteria to use as a foundation for projections. Institutional investors' willingness to purchase and Bitcoin whales' willingness to sell are the two biggest unknowns. According to Flipside Crypto, less than 2% of accounts have 95% of the total supply. To put it another way, even in this still illiquid market, one huge stakeholder may have a significant influence on the whole price movement. Institutional investors now have a greater presence on the market than they had during the long-term slump of 2017. One of the newest money managers to invest in digital assets is Brevan Howard Asset Management. Morgan Stanley and Goldman Sachs Group Inc. are now proposing to provide customers access to crypto assets as a further indicator of rising interest among the rich. In January, JP Morgan Chase & Co. analysts predicted that Bitcoin's long-term value might reach $146,000, a figure they subsequently reduced to roughly $130,000. According to Chris Weston, a Pepperstone analyst, social passions run deep as to the probable near-term direction for crypto. Dips, however, are obviously backed. Well, that's all for today's video. Let us know in the comments section what you thought of this video. I hope that you found this video interesting. If you want to see more like this, please consider subscribing for more. And don't forget to give comments and provide us with your valuable feedback. We'll see you in the next video with some more amazing, luxurious facts and stories. And until then, stay tuned.